Hello everyone, this is Twister here from 𝗨𝗏𝗏𝗏𝗧, and today we'll be going over NASDAQ futures and see what the TA looks like for the upcoming month. And yeah, we'll just run some analysis on the lower time frames as well to see where the drawn liquidity is at this point and see what the price may be attracted towards or magnetizing towards, and then we can also note down some pullback zones on the lower time frame. So starting off with the monthly time frame, compared to ES, we have taken the intermediate term highs, which were created in March on ES. Compared to that in Nasdaq, we have taken the highs up here, and we have closed above it, and we have had a bullish month after that, and we are fast approaching the all-time high that is just created just around here back in November 2021. So we can just mark that out as a monthly time frame high, and we can just look at the overall time frame. Price has just done a massive pullback, and then we have been just pushing up all the way up through from the month of October 2022 for since then until now basically, and we have cleared out an important zone, and we are traveling now into this order block, and I believe we did have the 50% of that order block, and we have closed above it. So maybe I'll just use parallel channel to get a better narrative, and you see, yep, so we have closed above the 50% of that bullish order block that was created, that formed a rejection in the sense where price rejected, closed below it, and then we came back up to just break down into the further bigger swings. Looking at overall swings around here, we can also see that this was the low and that was the high. We did come into the 50% below fair value into the discount to start impulsing back up. So price in an overall monthly sense, we have just done a push up, pull back into the fair value, and now we're pushing up into higher time frame zones. So something to be mindful of. This is an important zone that gave us a massive push down, and I believe the push down was around 37.47%. So we did see a massive rejection correction, and we also did break below and below this order block that was formed, but we did not close below it. We have been respecting the lows in the sense where the lowest low was formed, yet we have not closed below it. We did the sweep, and we're pushing back up. So a lot of long orders were opened around here to distribute further up, and we can look at this as an order block around here on the monthly time frame. I'll just remove that from here. That was the equilibrium on the bigger swing, so that's something that we can leave it there for now. This is an order block that's considered to be valid because we did push through it. We created an immediate rebalance of that, and then price pushed up. We have not come back down to mitigate the intermediate term high, so that's something that we can mark out on our charts. See, we may come back down to rebalance around here to push further up, or we may just attack the all-time highs. But this is an important demand zone that I would like to see mitigated eventually, coming down into this previous flip zone where, yep, price was supposed to go further down. But no, we did flip from here. We did a break of structure around here, and this was the high that was broken. And real quick on the monthly, we can look at this as a range. We have not taken the highs just yet, so we can leave that as a high for now, and we can see this will be our 50% zone. So looking at this whole price action, we can see some sort of push into the deeper discount zone, and then we can start looking at prices to accumulate in this zone, form some structure, and then we may start pushing up into the monthly time frame highs. So I'll just make this a bit more obvious for the weekly. So there we go. So this is what we would like our pullbacks to look like. We do not need that at this point, and this was a 50% of this order block. We'll just remove that to clean up the charts. So two areas, and you see how the equilibrium works into the high. So that becomes an important price level for a pullback, and then we also can add a fair value gap to add confluence to it, in the sense that, yep, this is something that fair value can be pulling back to take the highs. So that's something that we can work with once we have more price action to the downside, and then we can see some push up from there. But until we start closing below this area, we do not have any confirmation that we are even coming back down here. We also do have another fair value fair value gap just sitting around here. So that's level number 2, and we can drop down into the weekly time frame to get a bit better idea of where price may be pulling back down to. So yeah, so that was the order block. We have been pushing up. This was the equilibrium that we have taken from the swing high. So we'll just pull it all the way up here and just around here. So weekly time frame looks like that. We do have another swing high that was just formed in the month of August 2022, and we took out with impulse. We do have an internal fair value gap even on the weekly that works in confluence with the monthly. And we do not have a tap of that. We just have this candle that created the fair value gap. We did not come and mitigate that, so that mitigation is still pending. And we do have a rebalance of fair value gap right underneath this pullback, which worked into the monthly time frame, and we do have a full rebalance of that. And we did see price impulse away from there into the full fill, and then price pushed away, so that becomes an inversion fair value gap for us. So I'll just zoom into this area. Price impulsed up, pulled back, did a full fill, and then there was also a confluence with monthly fair value gap, and then we pushed away. We did a breaker structure after we pushed away from that time frame. So we do see that this low as something to be respected, and this is the low that took out this high. So we can mark out the swings in a sense from like from here to here. That will be our first swing that we will be looking at on an intraday basis, or based off of the weekly analysis, and also based off of the higher time frame zones. So we will look into the further lower price levels, but that's when we get there. For now, this is the time frame that I like to work with, because this is the immediate zone. So that's the high and that's the low that I'm going to be working with. So we'll just change that up from green to highs. So that's the zone that I'm working with on the weekly. We drop down onto the daily time frame to set the narrative straight. So this was the inversion fair value gap here that we did a full fill on the weekly. And we'll leave that. We can actually remove that, to be honest, to clean up the charts a little bit better. 50% of that weekly range. We do see that this high comes in just around the 50%. We do have a fair value gap that was created after that break, and then we did a full fill of that, and now we're impulsing away. So that is again the same thing, an inversion fair value gap. We'll just do it on the right, and there we go. And we're pushing away. We do have a volume imbalance just formed around here, because we did reach an extreme level and then we pushed down, but we have not taken the lows just yet. So this will be an important daily low that we have on the daily time frame, and then this is the pullback range where we are respecting the volume imbalance. So that is just formed around in here, and there we go. And volume imbalance, there you go. So that can be a drawn liquidity if we are pushing further up. If not, then this will be my fractal low that I'm looking at to be broken if we want to start going back into the discount zone of the weekly time frame. So that low, if we break that down, we are going into the fair value below the previous term high and into an order block that is just formed around here. This is the low. We can just there's a swing point, and this is the fair value, because you look at this. This was balanced. Price pushed down, pushed up, cleared the highs, clean sweeps. So something to be mindful of, that this demand zone can eventually get respected, and we may see some sort of price action into this. We break above, we can start even accumulating, take the highs, take the lows, and then we can start impulsing up. But until then, we do not know what price will be doing. But this is what the daily profile looks like since the last month. So we did see the month of July was all impulse up. We pull back down. We have not come down to the 50% just yet. We have formed a low around inducing people that here we are continuing to the higher levels, but then we may easily come further back down. So we just change that to the daily demand zone, and we just leave it here for now, a low that gets respected, and then this is the fractal high for the very, very low time frame. So these are the two levels that I will be marking out on the daily. So if we break above this, we may look at this volume imbalance to be filled, and then one more area I'll have a look is that we may see a decent rejection of that, and we just change it to this. So this will be 50% of this rejection wick. So I'm expecting something like this. If price pushes into the area 50%, we may start seeing some lows that gets formed, and then we may start breaking down. If not, we may just straight impulse through this and break and go to the monthly highs, which will be just around here. So how far are we? I'm just going to mark out the range, and here, so we are around like 4.5% away from the monthly high that gets taken if it gets taken. Dropping down into the 4-hourly time frame, let's see what do we see on a granular level. Pulling that further in, cleaning this up a little bit here, and there. TradingView loves to do that, just moves everything around. Okay, so we won't need this load just yet. We'll just work with the profile at this point, and that's there. Okay, perfect. So like we said, this was our weekly equilibrium. This was our daily low, and this was the inversion fair value gap that we had on the daily, and this is the daily high that we have marked out, which works in perfectly with our 4-hour time frame pullbacks. Like we see an impulse up from there. We did see a deep mitigation of that fair value. So for now, let's say we remove this, zoom into this price action around here, and we just keep it there. On the 4-hour time frame, we did have a break above here. So that was a 4-hourly break structure, and we did have some fractal breaks underneath in here. So that's a fractal break that gave us a confirmation that, yeah, price will be traveling to the upside. But yeah, that was the internal fractal break. Price came back down into this order block, or this was the origin of the move, because this took the lows, intermediate term lows, just around here. These were the intermediate terms lows that were taken, and then price pushed away, took the highs, and then pulled back down into the fair value, into the order block at the fair value, most likely. I'm pretty sure. Yep, there we go. So we can just do this as a green. So fair value, we did not close, and then we pushed away from there, and then we did have another 4-hourly time frame breaker structure. We pull back down again into the 4-hour time frame and order block, and then we did the same thing. What are we doing now on the 4-hourly time frame? We are creating relative equal highs. So these are relative equal highs. So from here to here, just around what? Around the volume imbalance. So they do need liquidity if they want to impulse around here. So they will be just creating something like this, and then they may just push up a little bit and then drop further down into this balanced price range. And the reason why I call it balanced price range is because we do have V-shaped recovery. So price just pushed all the way up into this order block around here, and then price just impulsed away from there. So, but we did not take the highs just yet. So that's an S&T divergence, and at the same time, right around important zones. So liquidity is getting generated. We may see a decent pullback, and then we may see a push, or we can just start traveling up. But we work with the price that we have, and that's the volume imbalance from the daily. 4-hourly time frame, we can also mark out something like this around here. So that will be our 4-hour swing. 50%, we have not taken the high, so I'll just remove that for now. And that's that. I'll remove that. So, and that will be our 4-hour. There we go. Remove that. So that looks a bit cleaner on the 4-hourly time frame. So we can expect price to push into these premium arrays, and we may see some reaction from there to the downside. If not, we can see some decent accumulation around here, sweep the highs, tap into the fair value, or sorry, volume imbalance, and then we may drop into PD arrays on the downside. Looking at the PD arrays on the downside, we do see fair value gap that was created just around here, and then that was mitigated. So that is an inversion fair value gap. or balanced price range, however you want it to look at, because price came in, it was a CV, and then obviously so sell side imbalance, buy side inefficiency, covered up with buying orders, or the buy orders were paid directly into these two fair values. So that can become an inversion fair value gap, just not yet, because price needs to come back down and find support into these areas. We may even sweep into the order blocks around here, and but we do not want them to start closing below these lows. If we start closing below these lows, this fair value gap is not validated as an inversion. But the reason why it can be an inversion is that we can trickle into this, we can accumulate around here, we can even take the high, sweep into this, take these lows, and then we can start impulsing away from there. But until that happens, this is what we have as a narrative based 4-hourly time frame. This is the equilibrium on the 4-hour. We may change that to a bit different color, so that's a bit more prominent, and may even now actually close that out too completely. So this is what I see, that price may be taking out the relative equal highs that are created just around here, and there will be relative equal highs there, and liquidity is getting generated just around the volume imbalance. So these are some important zones that I would like price to come down and mitigate. And yeah, these are some premium arrays. I do not want to work with these areas just yet, because if I'm trying to look for a bullish price action or draw towards the bullish price action, I want to see price come down to fair value, or at least come into these areas to mitigate the lows before we start attacking to the upside. If price comes there and accumulates, takes the lows, and then goes away, that's a totally different scenario. Until then, this from here, or something like this from here, is what I'm expecting. I would like to short if price gives us a decent opportunity, a decent rejection from these highs, pull back into the range, and then we look for our entries in there. So that will be something that I'm interested in to short, or I'm interested in longing around these areas. So hopefully you guys found that insightful, and that was my analysis, or my two takes on NQ for the upcoming month. So until then, stay safe, and I'll speak to you guys next time. Take care.